had CPI announcements last night. This is always the most important thing to look at until the next meeting. The actual result came out the same as the forecast, slightly less than the month prior. You got CPI here month over month, 0.4. This one came in 0.3, but the CPI year over year was 3.4, which was the same as the forecast. The major thing that we can see happening with the markets is a potential USD breakdown. So I'm going to show you that in the charts as well. And this is part of the second half of the 18.6-year real estate and economic cycle. Note, I didn't say stock market cycle, real estate and economic cycle, just to clear up any confusion if there may be some for new viewers. On the S&P 500 from that October low, we basically just keep getting shallow pullbacks of single digits. And again, to show the point of the data, 7% pullback, single digit pullback, new fresh high. So waiting for any sort of double digit pullbacks is unlikely based on the data. That's it. People look for 10% or 20%, they start to get greedy, hoping for lower prices, expecting a bigger pullback because the market has run up so high, and then they miss out on the pullbacks that the market gives. And before you know it, it's at a new all-time high price, or it's basically pulled away a lot from that low. So that's happened for the S&P. We're at a new all-time high price in 32 trading days and 44 days in total. So basically just short of 7 weeks, it's made a new all-time high. The NASDAQ, same deal. It just pipped a new all-time high in yesterday's trading session. 44 trading days and 63 days in total, because the top came in March. So basically 2 months to get to a new all-time high price. So again, another strong market here. The Dow Jones is just short of a new all-time high. We're into our 45th day and 33rd trading day. Still heading towards that higher price there of 40,300, but it has clicked over again to 40,000 points for the Dow Jones. In terms of the data, bull markets last longer than you think. The current bull market we are in is actually 19 months. The average is 61 months. And when I just look at the amount of months for each of these bull markets going back to the 1950s, we're coming up to the first of the resistance levels, if we can call it that. You had a 26-month bull month in 1966, or starting from 1966. You had a 32-month, a 31-month, and in 2020 we had the 21 months. So we're basically at to this resistance level here, and then the next round of numbers I'll be looking at is roughly 26 to 32 months. That would take us out another roughly 8 to 12 months from now, and that would be 2025. So to me, there's still quite a few people calling for a crash in 2024, roughly after the summertime. So sort of that September period. They're looking for this sort of 20% correction. Market's overbought. I think it's nonsense. And when I look at the data itself, there really isn't anything to suggest to me, in my own analysis, why you would get a crash in 2024 after everything that we've seen into new all-time highs, and that all-time highs can last a lot longer. Typically, the ones who are waiting for these big corrections are essentially bearish all the time, and they're right, 2 times out of 10. It's when you get those corrections. I think more so like 1 time out of 10 when you look at the broad data over 100 years. But anyway, looking at those big corrections, it doesn't seem likely at all when you come back to the actual raw data itself. And when we look at the technicals on the chart, they're still up. I've got another big one to get through in just a sec, but after these, if we start to get through early 2025 or mid 2025, based on these next levels, then you can start to look at roughly 50, 60 or so months for the bull market, and that's 5 years from the low, and the low is 2022. So somewhere out to, call it late 26, somewhere in 2027. We're talking stock market here now, not the real estate and economic cycle, but just the stock market, because that's what this is based on. Okay. So that's where I'd start to pick up from if we are able to get through that early part of 2025, and that should extend things again, pushing markets even higher for longer when most think the market should fall. After those dates there of 60 months, then you start to get a little bit crazy, 80, 70, 100, 130. We'll get to that. That's a long way off from where we currently are at only 19 months up in this bull market. USD as well. We'll get to that in a moment. XRP falling yet again. US dollar looks like it is also beginning to break down quite substantially here underneath the 105 and coming close to the next level, somewhere around this 103.9. So very big day down, and we've seen assets go up. Stock markets, of course, metals have gone up. You can see here the gold's getting close to 2,400, silver $30. I think that just broke to a new fresh high. Yes, it did. Gold not yet at a new fresh high. Oil also having a bounce, so coming back off the 50% level. Very, very nicely done there. And then if we just get back to the US dollar for a second, basically once we start to get this major breakdown, if this is in fact the first signs of it, then I would say we're going to be down for a lot longer over these coming years. Now, this doesn't happen like that. We might get a bounce, and then it starts to go on for a few weeks, and then we start to get another drop, and then it goes on for another few weeks into a rally, and then another drop, and that could take 6-12 months to get to those points. But overall, this could be one of the first signs, because we've got a lower high forming, and then the break under that 105 level, which was pretty key as it broke out. So it's back underneath that level, and that could be a fantastic sign for Bitcoin and cryptocurrencies. So this could lead to that next narrative of why Bitcoin should be going up and why cryptos should also be going up. Now, in terms of liquidations, Bitcoin's obviously gone up today, about 8%, hitting 66, breaking past the 65K level, but we haven't necessarily seen huge liquidations. That may have come at the lows, back in 12th and 13th of April, which has cleared out the market. Maybe it's cleared it out enough. Whereas in the last 24 hours, we haven't seen that much. The shorts were liquidated by 100 million, longs liquidated by about 40 million. So pretty much all in all, just around an average day of liquidation. Thanks again, guys. I'll see you back here at the next video. Until then, take care and peace out.